Hi, I'll turn my phone off. Thank you for attending our little webinar. My name is Vanda Crossley. I'm with eXp Realty, and I have my guest today is Karen.Newman, who is with NRL Mortgage, and I also have Anicia Carson, who is also my mentor with eXp Realty. Here is Karen's information. She can be reached at 281-813-7740. And I can be reached at 773-678-1085. And we're just going to talk today about the state of mortgages and real estate as it appears today in the world of real estate. Oh, let's see now how I get this thing to move. Okay. There's a picture of Karen and myself. Nice picture, Karen.
Thanks. It's an old picture.
I got you guys on mute because I'm moving around.
Okay. And so we're now in the middle of the pandemic in the world, and we just want to talk about the real estate market as it is today, which is in April 2020, and the mortgage industry as it is today in April 2020. So I get my information from HAR, which is Houston Association of Realtors, and they give a very, very good review of the market as it is now. So let's listen to that little video.
COVID-19 is ravaging the physical and financial health of the nation, but it struck the Houston real estate market too late in the month to hurt March sales figures. April, however, will likely be a different story. Single-family home sales rose 8.2% in March. Homes priced between $500,000 and $750,000 led the way, followed by the $250,000 to $500,000 segment. The median price was up 4.1% to $250,000, and the average price climbed 3.8% to about $310,000. Both figures represent the highest prices ever for a March. Townhomes and condominiums ended 3 straight months of gains with a fractional year-over-year decline of 0.5%. March saw a mixed performance for lease properties. Leases of single-family homes rose 1.2% year-over-year. However, leases of townhomes and condominiums fell almost 10%. Since the start of the pandemic, HAR members have been conducting more business online, using technology such as virtual open houses, virtual tours, and electronic signature documents to protect everyone's health. What's most important is for everyone to be responsible community stewards and heed the warnings of health experts and local officials.
So all this information is free and public information on har.com if you go to the newsroom, and they update this every month. So the most common question people are asking is it a buyer's market? And my response is, people are still buying and people are still selling. So I don't know if you want to hold off and wait till you think the prices are going to drop, but the interest rates might go back up, or there may not be a lot of people eligible. I just don't know. So we have to take everything day by day. So at eXp, we're already a virtual real estate agency or brokerage. So we're doing virtual signing of documents, virtual closings, virtual showings. We use technology. We practice social distancing doing our showings now. We show a lot of vacant homes. They're very easy to show. And if the home is occupied, we may require the owners to sit in their car or go to the backyard doing a showing. They don't want to leave the house. And of course, the sellers will require everybody to wear gloves, booties, and a mask. And of course, if you don't have booties, a paper bag on your shoes will work. Masks now are scarves that you can put on. And, if you don't have gloves, I have extra ones. So that's not a problem anymore. So Karen, talk to us about the mortgage and down payment assistance programs.
Well, for the most part, what's happening now is, of course, a lot of lenders have kind of shied away from the down payment assistance programs temporarily until the market settles a little bit and they can kind of get a handle on how the current economic developments or what the impact is going to be of this pandemic on our economy, as far as people's ability to retain their jobs and be able to maintain their mortgage payments. And so it's not that the down payment assistance programs have gone away. I know a lot of people there's a lot of information that's circulating saying that, you know, they've been suspended. The down payment assistance programs, the availability of those programs still exists. What has happened is that individual lenders are making decisions on whether or not they're going to continue to use those programs, and some lenders have elected to temporarily suspend the use of those programs, or either have added restrictions or overlays, as we refer to in the industry, of the loans that they will allow to participate. And so that is the reason why you're kind of getting different information, you know, depending on who you speak to about those programs. But the programs themselves do still exist. It's just that there have been some added restrictions, like I said, and some lenders have elected just to temporarily suspend participating at all.
So is that the same with conventional and FHA?
It's the same as far as the down payment assistance programs is concerned. The stipulations, whatever overlays that have been added on the lender level do apply to conventional and FHA, you know, loan products as well.
And tell us about the servicers.
As far as the servicers are concerned, like I said, that for the servicers for the down payment assistance programs, like I said, they are, you know, like I said, they are still being offered. The main concern here, as I said, with all of the changes that we've seen over the past month or so, has been a direct result of the Fed announcement back in March, where they dropped the consumer interest rate to 0%. And everybody was really excited, thinking that that was going to impact mortgage rates, and they were going to be able to get mortgages at 0%, which that did not happen. And it actually had the actual opposite impact on our mortgage rates, because of course, at that point, everything just kind of started going sideways. We saw some dramatic increases in rates and discount fees and things of that nature, and then followed by the quarantine order that was issued on a city level and state level, you know, as it kind of trickled down to our area. It has really put the investors, it's not so much the servicers, but the investors are the ones that are really kind of apprehensive at this point, as far as where all of this is going to end up. I think, you know, at some point in the near future, perhaps within the next 3 to 6 months, once things have somewhat normalized, as far as the restrictions and the COVID-19, once they know that that's kind of under control, and they've come up with a confirmed plan on how to manage it moving forward, then I think that we will see some degree of normalcy. But right now what's happening is that with the availability, with people, the possibility of people losing more jobs and not being able to make their mortgage payments, investors are kind of trying to get ahead of that to protect their solvency. And because if they start getting a lot of people that are putting their mortgage payments into forbearance, what happens is particularly with the government loan products, it can affect their bottom line, because they will continue, even though borrowers are not making payments, mortgage payments, they still have to continue to pass that money through on the FHA products to their investors. And so that can quickly create a financial distressful situation for the investors, and they're not willing to take that risk at this point until things have kind of stabilized and they can kind of get a handle on where the market is headed, what the result of all of this is going to be, and how they're going to be impacted.
Okay. So your suggestions for what you can do now to get ready to purchase a home in the future?
Well, I mean, because, obviously, yes, most lenders have added overlays. They've increased minimum mid scores in a lot of cases. At one point, we were able to finance people with mid scores down to 500, 580. With some stipulations, of course. It weren't, oftentimes they had to come up with additional down payment, or there were some other things that they had to do. And
Right.
obviously, we don't have access to those options anymore. Minimum credit score guidelines, for the most part, FHA, you're going to need a minimum of 640. With VA, it's in some instances is around 680. As I saw something, I think that was published over the weekend or earlier this week, that some lenders are only accepting conventional loans with 20% down and 700 credit scores. So it just all depends on the lender. Everybody is kind of, like I said, trying to stay ahead of the game. So while we're in the midst of all of this uncertainty, if it's put you in a position where you're no longer able to get a mortgage because something has changed from where it was when you originally pre-qualified, then I would just encourage everyone to just take this time to get things in order. Take a look at your budget. We're on a stay under this quarantine order. We're not, spending as much money as we once were on transportation, commuting back and forth to work.
Mm-hmm.
You're not buying lunch every day. You're not going by Starbucks every day.
Yeah.
Save that money. Save that money. Take some time. We have some extra time on our hands. Take some time and actually sit down and look at your budget. See what you can do to try to strengthen your credit scores. If your credit scores are at the lower end, this would be the perfect time for you to sit down and work on a plan on what you can do to increase your scores, reduce your debt. Now, I understand, a lot of people are experiencing a lot of different things. So there's not going to be one answer that will fit everyone. Okay.
Right.
So you have to take the information that you receive and adapt it to your personal situation. If you're not working at this time, or if you're receiving reduced pay of some sort, it may not be possible for you to save a lot of money. It may not be possible. You may, your focus has to be on shelter, having food for your family. I know everybody's grocery bill, I know mine has increased tremendously since all of this because we're home. But make those adjustments, but take the time to prepare, to try to get yourself ready and do the things that you can do in the interim, because at some point, I think that things are going to settle down. What we're experiencing now, I don't think is going to be the new norm. I really hope it's not the new norm, but we don't know. I mean, there's no one answer. There's no guarantees, even though a lot of people would like for you to think that, okay, well, this is what's going to happen. This is what's coming next or whatever. It's all speculation. We're hoping for the best. I'm hoping for the best. And I'm hoping at some point, like I said, within the next 3 to 6 months, we will at least have a definitive direction on what the market is going to look like, or what lending is going to look like, what our ability is going to be to originate loans. rather than, you know, kind of ride this roller coaster from one day to the next, because things are changing right now. Things are changing so rapidly. You know, what I told you yesterday may not apply today, and we have no control over that. But we can't get excited about it. We can't get frustrated about it. You know, your loan officer is just as frustrated as you are, so you can't get upset with them. It's not us that's making the decisions. We can only do what the investors allow us to do industry wide. And so we're just trying to adapt to that and pass the information on as best we can. But just prepare. You know, preparation is key. If you're looking to make a home purchase, you know, this is a goal that you want to accomplish this year, or whatever deadline that you've set for yourself, then just start making steps towards that.
Now's the time to dispute things on your credit report. Try to get some things removed from that.
Well, and the thing that you have to remember about disputed accounts, and that's another thing, because I know a lot of times people kind of go, when they start repairing credit or when they start looking at credit, that's the first thing they want to do is go in and dispute everything. But you have to also keep in mind, particularly with FHA financing, once again, if you have disputed accounts and they have balances and they are active accounts, we have to have those disputes removed before we can proceed in finalizing your financing. So I would not necessarily say you want to just go in and arbitrarily dispute everything. I mean, take a look at it and be honest with yourself and take a realistic look at it. If the information that's being reported is accurate, now if it's inaccurate, then that's an entirely different scenario. And understand, I'm not a licensed credit restoration professional, so I'm always kind of very careful about the type of advice and that you know, I give as it pertains to credit. But you also, you know, you do have to take a realistic look at what your credit profile looks like. If the accounts in fact are yours, if the information that is being reported is accurate, and then make whatever decisions you decide to make. If you decide to dispute the account because you feel that maybe there are errors, then that's one thing. But if the information is accurate, then that may mean that you may need to take it a step further and get some actual credit, you know, restoration advice from the professionals, the people that do that for a living, that are familiar with what the applicable laws are as it pertains to what you can do, what they are supposed to be reporting and what they shouldn't be reporting, and take action that way.
Okay. I've got some resources for some good ones too.
Right, I do as well.
Okay, so I skipped this other one because I noticed I had a couple of typos on here. Oh, financially responsible. You were supposed to review this, Karen.
Yes, ma'am. You know, I gave it to Cruz.
Hey, it is what it is.
Yes, ma'am. I gave it.
So focus on savings. Don't spend that stimulus check unless you
Right.
absolutely need it for
Right.
shelter, food, utilities, or to stay healthy and safe, because those are the priorities, and be
Right.
financially responsible with that money. And they did start coming out. I know several people that have gotten their checks in their bank already. So that little $1,200 or $1,700 is going to make a big difference in a lot of people. So,
Well, yeah, but you need to, I think for the most part, you know, I think I would encourage everyone to be financially responsible. You know, granted, everybody's situation is different, and I do not, I mean, my heart goes out to people out there who have families that may are trying to survive off of less than what they, you know, are used to as far as income, you know, coming into the household. So I'm definitely not desensitized in that area as it comes to that. But I think that, you know, the stimulus checks, we need to focus on being responsible. You know, if you have bills, if your rent is past due, you know, pay your bills.
because you need
Oftentimes, you know, right, you know, with credit card companies, auto loans and things like that, you know, oftentimes, you know, you can work out arrangements with them if you just don't have the extra to put towards those things right now. But I would just encourage everyone, if at all possible, to try to maintain, you know, a good credit history. If you have the money, if you're one of the ones that are still that you're working from home, you're still getting paid, continue to do the same things that you would do, you know, outside of this pandemic. Do not get laxed about paying your bills on time, and making the at least minimum required payment on those installment agreements.
Mm-hmm. So Karen, we had a couple of questions that came in. What if my credit tanks now due to COVID-19? I think I spelled that wrong too. But COVID-19 or COVID-19 coronavirus. And then what if I have to break my lease? How will that affect me in buying a house going forward?
Well, I think documentation is key. Obviously, there is no one that is isolated to it is, as it pertains to what the environment that we're living in right now. Everyone knows and is experiencing this together. This is a worldwide epidemic, pandemic that we are experiencing. And so I would encourage you, lenders understand if you can demonstrate financial responsibility in showing that it was something that occurred that was totally out of your control. And so documentation is the key. You know, keeping copies of your pay information to show if there was a decrease in pay, you know, being able to document that, showing what your pay stubs would look like before versus what, you know, they were after or during.
Mm-hmm.
Communicating with your creditors in writing, you know, sending emails or letters, you know, where you are requesting, where you're explaining your situation to show that you're making the effort. You've done everything that you can possibly do within your control to keep those accounts in good standing. And I think if you can demonstrate that, I mean, obviously, if you're in a situation where you're just not able to maintain it and they're telling you have to move and you have to break that lease, that's out of your control. But if you have keep good documentation of your communication, any correspondence that you receive from your landlord, notices and that sort of thing. Sometimes, like I said, you know, after the dust settles and you're back on your feet, you're back working full time again, you know, there may be possibilities that at some point lending will, you know, take consideration for, you know, this economic event that we're experiencing right now, and they may be making exceptions. And if that does happen, now understand, Karen.Newman is not saying that that's what's going to happen. I'm saying that if that happens, you want to have all of your documentation so that you can show that I did everything that I possibly could to prevent this, you know, event from happening.
Right. This is going to happen.
Exactly.
To a lot of people.
Right.
Okay. Any final words of advice? My words of advice is work toward your mental and physical activity to achieve the purpose or results. And if you do that and you stay positive about this, we're all, like to say, we're all in this together. Mm-hmm. And to try to stay positive in it and try not to let your mental or physical state decline doing this and try to make it better.
Right. Absolutely. I mean, this is a trying time for everyone. And I think that is something that we have to remind ourselves of every day, is that this is not an isolated situation. This is not just you personally. This is a citywide, worldwide event. Everyone is experiencing it. And I think it's important that you try and stay positive, which sometimes that means that even though we're not able to move around the way that we normally would, You know, if you enjoy reading, you know, I've been doing a lot of reading, listening to music, you know, things that make you feel good. Sometimes you have to take a step away from the media,
Oh, yeah.
your Facebook friends,
Yeah.
you know,
All the
because
conspiracy theory things you
exactly, I
get.
mean, sometimes you have to tune it out, you know, take it a day at a time. You're not alone. Everybody is going through this. And so do, you know, take some time to whether you meditate, whatever it is, whatever is calming, because I think there's a lot of fear, there's a lot of anxiety, in our industry especially, because of course, you know, we're moving forward, but I mean, it's kind of like hurry up and wait, you know, and it can get frustrating and it can get to you. And so when you feel those things coming, you know, upon you, and it's kind of taking over and putting you, because of course, understand, you know, anxiety compromises your immune system. And right
Yeah.
now, everybody needs to be concentrating on, you know, staying healthy, staying positive, and we're just going to ride it out together and see what happens. I mean, that's all we can do. That's the only thing that we can do, and pray.
Stay prayed up.
Absolutely.
Anicia, how is this affecting your real estate business? Okay, she's still there?
I think she's muted. I see that her mic's off.
Oh, okay. All right, well, it has affected my real estate business, but we're going to press through because like I said, there's still people that want to sell. There's still people that want to buy, but it's just the volume is down, which is, you know, to be expected. But
Right.
we're going to hang in here. I'm going to be here through the long haul, so I'll be here on the other side of it. So
Sure. Right. I mean, that's all we can do. This is our livelihood. This is what we do for a living. And a lot of people don't realize that, you know, they kind of, you know, be nice to your loan officers and your real estate professionals, because, you know, we're just as, I mean, we're working hard. I think a lot of people don't realize we often work, you know, 3-6 months in advance, you know, and we may not realize that income, you know, there's the things that we do today, we may not see the fruit of our labor for 3 to 6 months down the road. You see what I mean? And that's just a normal for our industry. So understand how all of this is making us, the impact that it's having on all of us. And so, you know, be nice, be kind to your loan officers and your real estate agents, because we're kind of going through it as well. And we're not, I mean, none of us, I don't know of anybody in our industry who gets up every day and say, okay, let me see whose bubble I can burst today, and, you know, what, you know, how many people I can deliver bad news. That is not our focus. That is not our goal when we get up in the morning. When we get up in the morning, our goal is to try to help people to realize a dream. And I know, and I'm sure, Vanda, you feel the same way. Whenever, you know, I approach a client with an issue, if something comes up, you know, I've always tried to make it a practice, you know, if we have a problem and I have to bring that to you, I also like to have options for a solution.
mm-hmm.
And obviously in this market, you know, I'm having to tell a whole lot of people, I don't know. And that's not something that so it's been a big adjustment for me, but I mean, that is the honest truth. There are a lot of unknowns right now. I mean, I can tell you what I know today, and that can change. It can change this afternoon.
I was going to say, not even tomorrow. It can change.
Exactly. It can change this. It can change 15 minutes from now.
Right.
And so that is a very difficult situation for us to be in as well. But we're being honest. I mean, if you know, we have a responsibility to communicate the right thing, accurate information to you. And so it may not always be pleasant. It may not always be what you want to hear. But it's not something that we just, you know, decided, okay, well, we're just not going to do. There's just a lot of uncertainty. And I think everybody has to be sensitive to that. Just calm down and, you know, just take it in stride we will get past this. We don't know when, but we will get past it.
Yeah. Man, there's so much uncertainty. I mean, I have to watch the news every day just to see what's changed
Right.
from yesterday to today, but I try not to do more than 1 or 2 hours of it a day.
Right. Yeah,
Like you
exactly. You
said,
have
I'm
to
putting
limit
on
it.
some music, doing some meditation, watching some
Right.
YouTube videos, or
Right.
just binge watching a series on Netflix or something like that. So,
Right. Yeah. Yeah. Yeah.
yes.
Yeah. I
Okay,
think we
well,
all, yeah, that's what everybody's doing right now.
so I think we'll maybe do this again in another month and maybe have a credit expert on here and
Okay.
see, you know, what the market is doing at that time. What do you think?
Okay. Yeah, absolutely.
Okay. All
Absolutely.
right. Sounds
Well,
good.
thank you for having me. I appreciate it.
Thank you, Karen. I
We
appreciate
will
you
be
being
doing
here.
a lot. I think everybody right now is kind of doing a lot of the virtual meetings and things like this. And I'm actually kind of getting accustomed to it. I was, a little bit apprehensive at first, but it gets a little bit easier each time. But I mean, the important thing is just to stay in communication.
And I've been using Zoom for over 10 years, and this is the only time I've really used it for personal with, but I used it like at the school that I taught at. That's how we taught through Zoom.
Oh, okay. Oh, okay. Okay.
If I had known, I'd have put a little money invested in technology, but
Who knew?
who would have predicted
Who
this?
knew?
So,
Who knew? Who knew?
okay, well, we'll talk to you soon. You have a good afternoon, Karen.
Okay, you too, Vanda. Thank you.
All right, bye-bye.
Bye-bye.